Hey everybody, Jake here at TrendSpider to go over the weekend video, the first one for 2022. Hopefully everybody had a good holiday and new year, and hopefully everyone had a decent week. The markets definitely did not as far as indices go and a lot of individual names. So let's dive in, look at some broad markets, look at some crypto, and then look at some individual names. Starting with SPY, you can see here that we now have the fourth red day in a row, which is actually pretty rare for SPY as far as just red days in a row go. Notice here that we actually did not have that big of a drawdown on these 4 days, so it'll be interesting to see how this plays out next week. The logical area for this to possibly move down to would be this area from the October low anchored VWAP. Remember, we looked at this zone a few weeks ago before we hit all-time highs in late December. And so if we did continue down, this area below around 454 all the way to around 458, 459 would be the zone to watch below. Now, what's interesting on the weekly chart is, notice that we're getting pretty close to the apex of this ascending wedge here. So the more time that goes by, the the closer we're getting to the apex, which is essentially just the end of this ascending wedge. So we'll have to see if this thing finally breaks down. Definitely not a strong weekly candle here, but still within the wedge, and for now, not a lot to go through other than the fact that it's getting pretty tight up there. Now, going into the Qs, we did have a pretty rough week here as well. And notice here, if we look at the daily chart, we can go back pretty far for this trend zone here that I drew. So going back pretty much since October of 2020, you can see that we've tested this area multiple times, shown by these blue highlighted areas. And you can see that we're exactly at this area again, this diagonal trend zone potential support. Notice that we closed pretty close to the extreme bottom here of that support zone, as shown by this arrow here. So if we do start to break down, that is definitely something to consider as a potential bigger move to the downside coming. And that move would potentially be to this volume shelf below. So if we anchor the volume by price from the COVID low, pretty much measuring each volume node as a function of price rather than a function of time, you'll see we have quite a bit of volume below, highlighted by this volume shelf, and that's anywhere around, we'll just highlight this, let's say from around 360 all the way up to around 370 or so. So right now we're at 379. That would put some downside for us, about 10 points or a little more. So depending on how hard this moves, and who knows, we could have an inside week next week, because this is a pretty big down candle. So, do we continue down that big next week? That would be a really rough start to the week, but all in all, you do have a lot of volume supporting price around that 360 to 370 area below, highlighted by this green zone. So we'll have to see how things play out. Interest rates, especially looking at TNX, is going to be a main thing to keep an eye on. So here you can see, if we quickly look at the treasury yield here, especially on the weekly chart, notice that we have this ascending triangle, and we're actually starting to break out a little bit. So notice here what I've done is I've essentially created just more of a zone rather than an exact area. And we did actually break above this previous high back in April of 2021. So you do have this ascending triangle breakout on the weekly on the 10-year yield, and that would be definitely something to keep an eye on going into the rest of the next week, the month. We'll just have to see how far this continues to move up. Right now we're at about 177 on the yield, and that is breaking highs from what we saw back in 2021, or excuse me, March of 2021. And so we'll just have to see how that plays out. But when yields go up, the market definitely does not like that, especially names with high PEs, names that are high growth names. That's why you've seen growth stocks continue to get killed. So apparently tax loss harvesting was not the only reason those were going down. Now going into IWM, very similar setup here. We do have a potential inverse head and shoulders. Definitely not too confident about this holding, but if we did continue down, there would be potentially a right shoulder all the way down to around 213 or so. If we continue any lower, that would be invalidated. So something to keep an eye on. But then on the weekly side of things, you'll see here that we got rejected right at this volume shelf. And if you've been watching these videos over the last year, this volume shelf has stayed here. So the price action just trading within this very tight range has created this just huge area of volume aggregating here. And once again, we had trouble breaking through it, failed to break through, and now we closed at almost the weekly low. Not necessarily the strongest setup going into the week ahead. And remember, IWM is definitely one that's going to be hit pretty hard from rising rates. So you don't have a lot of dividend yielding names in IWM. You'll notice that DIA did actually pretty well this week because, or better than others, because you do have a lot of dividend yielding names in that particular index, the Dow Jones. Now going into XBI, XBI is something I like to look at as a risk on, risk off sentiment indicator in the market, similar to how I look at Bitcoin. And you'll see here that since the highs back in February of 2021, we are down about 41%. And that is not looking like it's even the bottom yet. So if we look at the weekly chart here, you'll see, let me get rid of this volume by price. You'll see here if we start this trend zone all the way back to around 2010, you'll see that we have a lot of room to move down still before this actually would test these previous trend zone support areas, which in this case, if we just went straight down over the next month or two, that would put us in the mid 80s or low 90s. So definitely not the strongest look here. That is not by any means a strong weekly candle here on XBI. But remember, we have to follow price action. We could have a really strong hammer that forms next week, and maybe we get a bounce from there. It's all about how price action evolves. Any charts that you're looking at have to have an if-then. If we continue to break down and hit new lows, then this area, this green shaded area below, is going to potentially be an area where price can bounce. But as I mentioned, next week we may have a big flush and a green close, which would put us set us up pretty decent into the second half of January. So let's just see how things play out. But for now, not a good look on XBI. And then if we want to go into some other risk on, risk off indicators, I like to use Bitcoin as that. You'll see here on Bitcoin that we did have a little bit of a flush on Friday. That's when I do these videos. But we did have a little bit of a bounce here off these September lows. So for now, decent looking candle, if you want to call it that, here on the daily chart going into the weekend. But remember, the weekend can be very volatile, especially when you do have a very defined trend in crypto. Sometimes that trend just continues. So the September lows are definitely what I'm keeping an eye on. And if we break down through that, then the COVID lows would be what I'm watching. So if we look at the weekly chart, you'll see the anchored VWAP. I have a 12.5% offset here. So what does that mean? It means that we have our original anchored VWAP here, and then we have another VWAP 12.5% above that to take into account this price action here from April and May of 2021. So these candles did not get all the way down to the anchored VWAP, but they did get to around this 12.5% offset. So that's why I want to create another offset here. And if that happened, that would put us anywhere from around, the original VWAP is around 31,000, and then that 12.5% offset's around 35,000. So you do see a lot of people mentioning 32 to 35K below if this breaks down. A majority of people thinking that is probably going to not let it happen. But all in all, definitely not the strongest setup going into the week ahead. But as I mentioned with XBI, we have to look at price action. Price action can completely change from here. Who knows? We could end Sunday at 46K, and that weekly candle looks a lot different then. So just keep in mind, price action is constantly evolving, and that's how you have to look at the markets. If this happens, then we go from here. That is Bitcoin. Looking at Ethereum, pretty similar here. Ethereum is actually not at the September lows yet. So Ethereum is definitely lagging Bitcoin as far as these levels go. If we did go down to the September lows, that would put us around 2,700 on Ethereum. For now, we did get a bounce right around 3,050 today, which is Friday. But we are still below this June low anchored VWAP. Notice that this was a pretty strong area that held back in September. And so we did break down through it today on Friday, January 7th. And that is a little concerning. But we'll just have to see how this plays out into the rest of the weekend. But on the weekly side of things, this long-term support zone that we've been talking about for months now finally has broken down. We've continued to hit these new lows over the last 3 weeks, and that will be something to be looking at on the bear thesis side of things. And if we do continue down, as I mentioned, those September lows around 2,700 would be a potential bounce zone, at least short term. But we are seeming to roll over a little bit on the crypto side of things, especially as interest rates potentially are going to be hiked. We're already seeing them in the actual yield markets. So as I mentioned, the TNX, the 5-year yield is at a high. So all of these things are already kind of being put in motion. Now, going into some individual names, let's go to Tesla. This really started the year out very strong and then ended the first week of the year, not so strong. So we had this huge gap up, we filled it and more going into Friday. And the thing is, we still have this gap below. And remember, if you ever want to look at gaps on the chart without having to go and actually manually add them, you can turn on the gap snake, which is just an indicator on the platform, and you'll be able to see all of the gaps on the chart. So we do have that gap below that would fill right around 940 or so, give or take 20 cents. So that is the gap below. And then on the weekly chart, not only do you have an outside bar, but you have a bearish engulfing candle here. The body of this week's candle is engulfing the entire range of last week's candle. Not even just engulfing the previous body, engulfing the entire week's candle range. And so this is not what I would call incredibly bullish, but it wouldn't shock me to see an inside bar with this big of a range this week. We'll have to see what happens. Who knows? Maybe Elon Musk continues to sell. He said he wasn't. We'll see. If I was going to simply look at an area below that we could bounce at if we continue to move down, I just drew this trend zone. So all I did was I connected the wick here, this bottom, to this wick here. And, I'm just kind of eyeballing it here. So notice that they're connected there. And then I add some zone here because there's a lot of price action that didn't test this exact trend line, but it did test this zone. So you can see a lot of candles, bodies, and wicks included in this trend zone. And so that's how I kind of come up with how wide this trend zone is going to be. It's not a percentage. It's unique to every chart that I'm looking at. In this case, this captures a lot of those areas. It captures these wicks here, captures this area. So that's why I picked this particular zone width. If we did move down, let's say in the next couple weeks, who knows what's going to happen. But if we did move down, that would put us in the mid 800s here. And if you look at the chart, we actually have another gap on Tesla that would fill around 842. So that's kind of right in line with this area below, highlighted by this trend zone that I just drew on the weekly chart. We'll have to see what happens, but not necessarily what I'd call the strongest setup for the bulls. Next one we'll go into is NEO. Same type of company, I guess, if you want to call it that, and same type of price action. We had a really strong move up over the last week and a half or so, but you'll notice here if you look at the anchored VWAP from the COVID low, this acted as an area of support multiple times, highlighted by these green circles. And then it acted as a almost perfect resistance zone here over the last few days. So we had a huge move up from the mid-20s, around 27, all the way up to around 33, 34. And then we're back to 29.30 here with the close on Friday. Now, if you look at the weekly chart, you see here that we did have these previous areas that we bounced on the COVID low anchored VWAP. But then you can see that this price action is simply just these previous support zones, which is kind of a function of the COVID low anchored VWAP creating this horizontal level as it flattened out. But you can see if you were just using price action, simply previous support acting as resistance now, and a pretty hard rejection, and a bearish engulfing candle on the weekly chart. We're engulfing the previous week's body here with this week's body. So NEO, not necessarily the strongest look, but you did have a higher low. That's something to consider. So notice here, your low last week was down here, as I mentioned, in the 27s. and then this week's low was right around 28.40 or so. For those that are looking at just simple price action, higher lows generally are something to keep in mind. But as I mentioned, all in all, the candle is not incredibly strong. Let's go to one that actually did have some higher lows as well. PayPal, still probably one of the most frustrating and probably overcrowded names out there right now. Everybody's trying to go bullish on PayPal, and it just keeps getting rejected at this earnings gap anchored VWAP. So this earnings gap was from November 9th. That's when we had this huge gap down. And you'll see here multiple times the price action has had trouble getting through this area over the last month or so. And once again, we were rejected this week after a relatively strong start to the month and the year, and then just a pullback. Now notice that we are having these higher lows here shown by this ascending triangle, but we'll just have to see how this one plays out. Not necessarily the strongest weekly chart here, or weekly candle here. As you can see, we did close around 187.60. And if you anchored the volume by price from the COVID low, you'll see we do have a lot of supply that we're still trying to get through here. But you can also see that there's a lot of volume supporting price from around 185 to around 195. And I've highlighted this volume shelf as yellow, orange, whatever color that is to you, because we are below that point of control. So right now, this is going to act as a supply zone. Remember, anytime the price action is above the point of control on a majority of the shelf, that's when I'll make it green because we're above that area. But for now, we are right at it, slightly below it, and that's why I have yellow or orange for that kind of caution color. Next one we'll go into is AFRM. This is one that I keep getting a ton of requests for. It seems like a lot of people are in this one. This was a really big mover back in September, October, going into November. But it's also been a massive mover to the downside, almost giving away all of its gains from pretty much late August and into September from that gap up that we saw from earnings. But you'll see here on the weekly chart, everybody was kind of looking at the same thing, and that was simply just this gap here from the earnings. So you can see here the gap filled almost perfectly. I think there's still a little bit left here. You can see the gap snake will actually show you how much is filled, how much is not. So technically there's maybe, who knows, maybe a few cents that were missed here on that gap fill, but overall, a really, really rough week here. A lot of those growth names, AFRM, SE, just brutal weeks. And we'll have to see how this plays out. But this is not a strong weekly candle at all. Maybe we have a continued flush next week and you have a nice hammer that forms, or who knows, maybe an inside bar. But this is not what I'd call an ideal bullish setup if you're looking to have an edge in the market. And a lot of people have been trading this week, just trading to trade. Remember, you don't have to trade. I posted something on Twitter this week pretty much saying there's always going to be a trade, right? It's a market of stocks. There's always going to be a stock to trade. But that doesn't mean you always have to trade. That can be very detrimental to your account if you're just constantly trying to trade just to trade and not looking at those high probability setups and letting the market come to you. And letting the market come to you simply means letting the market, show high probability setups that you find that you have an edge, and then taking the trade. If you're just taking a trade with no edge, or maybe you've got 5 conditions you need to be met and only 3 of those conditions are met, you're not letting the market come to you. Once all of those conditions are met, that's when the market is coming to you. So AFRM, not a strong setup here. We did still close within this trend zone support, but I'm not incredibly convinced this is a low yet. Hopefully it is for longs, but we'll just let price action determine that instead of our opinion. Last one that we'll look at is actually one that had a great week. XOM, ExxonMobil, Energy, Financials all had a great week to start off 2022. You'll see here, after breaking out of this downward sloping trend zone, we pretty much did nothing but go straight up with new highs every day to start 2022 this week. And you'll see here, if you look at the weekly chart, we actually have this bigger ascending triangle breakout here dating back from the start here in pretty much the beginning of 2021, you'll see we've got these higher lows shown by this green zone, and then we have kind of this flat area that we hit these highs around 62 to 65. Finally broke through that area this week, and if you look back, this is still a lot lower than it was back in 2014, 2015. So this may be a really big mover going into the rest of the month. And we'll see if money continues to rotate into these more value names. Now, one thing I'll look at here is the seasonality. So if you look at the seasonality for ExxonMobil, let's just go back since January of 2009, which was pretty much the low of the financial crisis. You'll see here that January only has a 46% win rate. So not necessarily the strongest month of the year, but remember, we're looking back since 2009. That's where I generally anchor from. But if you look at, maybe the start of this downtrend, which was pretty much in the mid 2014, you could always start this seasonality since, let's do June of 2014. And you'll see here that the seasonality doesn't really change. And the reason why I started it from June 2014, because this was the top here. So this has been in a downtrend since. So we want to look at the seasonality of this downtrend. And since that point, this point that I'm showing with this red circle, January has about a 50-50 chance. Going into February, March, April, you do have slightly increasing seasonal rates. And then you'll see here July definitely has the worst seasonality with only a 0% win rate. So if you are new to TrendSpider, you've never heard it, and you're just watching this video for the first time, there's a ton of different things you can use on the platform. Seasonality is something I like to use a lot, especially the monthly, because I'm more of a position swing trader. But you can also go down to the hour of the day. You can look at, since the beginning of this year, is there a specific hour of the day in 2022 that's performed really well? So you could go January 2022 is your start point, and you'll see there's actually some decent discrepancies this week. Those will likely normalize as time goes by, but there are some definitely some times during the day that are stronger than others so far in 2022. So make sure to check out the seasonality. Make sure to check out all of the different things that we went over: raindrop charts, trend zones, anchored VWAP, anchored volume by price. Using the anchored VWAP with the percentage offset bands is something I use all the time. There's a ton of different things you can use. If you've got your conditions and you want to check out different things setting up into the week ahead, you can always use the market scanner and look at, maybe you're looking at anything with an increasing 50-day moving average and a bullish engulfing candle. You can go in and add those parameters and search whatever market you're looking at. Dow Jones, a specific custom watch list you've made, literally pretty much endless as far as the options go for what you want to scan through. Hopefully this weekend video is helpful. I know it was a tough week out there for a lot of people, and it's been a pretty tough 6 weeks going into the end of 2021 into 2022. Remember, if you're having trouble trading, sometimes it's better just to step back and let the market stabilize a little bit. Or just look for things that are in an uptrend if you're long. Look for things that are in a downtrend if you're more of someone that's shorting. There's always an opportunity out there, but just make sure that you always have an edge. And hopefully TrendSpider does give you an edge in finding that strategy that works for you. Everybody have a great weekend. Thank you so much for watching. Remember to like and subscribe if you enjoy these videos, and have a great second week of 2022.